Welcome to my YouTube channel. Good morning, good afternoon, or good evening. It depends to the time wherever you are. Again, you are welcome. I have started this channel to actually for absolute beginner, and I'll be focusing more on how to catch spikes on boom and crash. So that's the main purpose of this channel. I'll be showing you how to catch spikes on boom and crash. And as you can see on my chart, I have a lot of indicators. The main chart I have like 4 moving averages. Those, unfortunately, I'm not going to give out the setting yet, not on this video in particular, but I'll give them away one day. Because for now, I want to first teach you how to catch spikes. Yeah, like that. So our strategy actually will be focusing more on 5 minute time frame. I believe myself, for the time I've been trading, I realized that 5 minute and 1 minute actually work together. But 5 minute is more, if you get a signal on 5 minute, it's more accurate on 1 minute. But if you're working on 1 minute only, there's a lot of uh, fake signals and stuff like that. 1 minute is all over the place, while 5 minutes it's kind of like more straightforward. So now our strategy is like this. If you want to catch spike on 1 minute time frame, what you do, you wait actually for this moving average. Here we are on boom. If I'm not wrong, it's boom 500. Okay, boom 500. You wait for these moving averages on the mini chart, these pink and black, to cross each other. That means now the moving average pink has to be above black moving average. Well, if you go on 1 minute, you will see that the moving average purple and the red also, they are below the market price. So they are below the market. So that's now an indication of an uptrend. So to now learn how to catch spike, as you can see here, it's actually a demo, and as you can see, the market, it's on uptrend. That's what we want, but there is no good setup actually for me to show. So let me just move along, move a little bit. Okay, where there's a nice sorry again, where there's a nice setup. Okay, it's actually ended here. So whenever you see the pink and the black moving average cross each other, it's an indication of an uptrend on boom. Where on crash, the black has to be above the moving average pink. So let's go back to boom 500 and see. So here we actually are on a uptrend. So let me go to where the market was. It actually gave us a good signal. So as you can see here on the first window, we have RSI 14, RSI 4 actually. That one it's to catch spike on a minute. I'll explain that further. And on the second chart we have IDX 51 and moving average 34 simple, first indicator data, and the RSI 14. Those one they are playing a role actually on 5 minutes. As I said, this where was I? If you look here, you realize that even here the RSI was below moving average 34 simple. So yeah, so now to catch spike, when you see this one, you shift to 1 minute. Let me go to 1 minute. You shift to 1 minute time frame. So we are actually here to catch spike. What do you do? Before I go on, this if you have an account, let me say of mm, a balance of 40 down, $40 down, you wait for the RSI actually to touch RSI 4 to touch 2 on boom for you to enter. But not only that, you need to have a lot of confirmation. First, RSI has to be at 98. Second, you would draw an area. Make sure that when RSI 4 is at 98, make sure that your RSI 14 also is reaching the most kind like resistance and support. For example, here, if I have an account, if I was to trade this, I know that okay, here this moving average on 5 minute, I have what I needed, the a crossover between black and pink, where pink is above black, and then you come at one. Then you now look for, you look at your RSI window one. Okay, RSI 4 it's over 2, and then below 2, and then you go here, okay, not, let's say not below but touch 2 level of RSI, and then you draw your trend line connecting. Now from here you can see that you connect where the might have been rejected, 1, 2, 3, 4. So that area, it's an area of resistance. So it has a lot of rejection. Now for most of the people, they are probably going to draw like this. They are going to put this horizontal line like this. That's why if you draw this line, you are going to get it wrong, totally wrong. That's why I said, that's why I'm telling you that if you draw this one, it's going to be true, because you are probably going to enter here, but your account is going to be in a very much trouble, because this line, it, I'll talk more about that line later, but this line, it's more useful on the main chart. It's more useful on the main chart. So if you draw like this, okay, that you draw now your line, your trend line here, connecting there was this market ended here, wanted to go above, ended here, and they go on start selling, and it wanted to sell again, no, until it broke this area. If you want to draw that, let me say now it broke this area, this area. So that area has been rejected, have been rejected here, and then broke out. So the breakout is this spike that ended here. If I'm not wrong, let me just, it actually ended, the one that broke out ended ended here, if I'm not, yeah, ended there. So that's how you do it. It ended there. So now you now draw your trend line connecting this one plus this one, and then all this one have been rejecting this trend line, and then bigger it comes here, so it touched that one. So with a small account of as I said, of a balance of 40 down, you wait for the RSI to touch 90, I mean on boom to touch 2, level 2. But you can also do it like, if you have now an account of let's say 100 above, you don't have to wait for 98 for the RSI 4 to touch 2. I mean to touch what, to touch to touch 2. But then you look at your RSI 4 and realize that the market have been rejecting this 10 period, 10 level 10. So 1, 2, 3, 4 breakout, 5, 6, 7. So that level 10, you can see that that is the level where the market is likely to spike. But now when you see touch level 10, then you again move your trend. You know that every time the market was touching level 10, the market rejected this area. You can see it reject this area, 1, 2, 3, 4, 5 breakout, and boom, 6. You touch that, and then this and the 7 again. All those spikes, they are yours. You can go on, you can clearly see that boom and again boom. But this spike, the market is already indicating on 5 minutes, it indicating and are a downtrend. So that one was not ours. Since this channel, I just want to teach you how to catch spikes. You know, this channel, as you can see, the market now it's on an uptrend, even on 5 minutes. Let me just do this. An uptrend, you can see it keep on going. So let me just take this away not to confuse you. It's keep on going down, but if you come here, with a value of a large account, as I said, you do that. This market, if I have to draw, let's say if there's a clear drawing, we draw like this. For those with huge account, of course, definitely you do that, because the market will be rejecting it. 1, 2, and this one was going to be a spike. But for now, you now see the market here been rejecting this level, or let's say it's a level 32. 1 reject, okay, and then 1 and 2, and now it's coming to 32. So it's up to you now to see if you want to enter when the market is really at 32. But then it's 32, and this it's 32, this one. But you know that it's actually here, it's almost touch our trend line, so you could have entered. So it's also coming, so that trend line of our it's going to stay. But now for those that huge account, for I mean small account, you just have to wait until the RSI 4 touched our what, our 9 or our 2 period, because this 1 minute. You can also use IDX, which I never mentioned since I started this video. You can use IDX. Actually, it's, you know, you can shift the market here, and you can actually like also shift. If you want to use IDX perfectly, you shift the market like this backward until it cannot move backward anymore, like that. So because if you moved it, shift it like this, it's actually IDX move. But if you shift it at the last like this, last play backward until it cannot move, that's now perfect. So this IDX, it doesn't matter if you zoom it out. If you zoom it like this, it's still going to give you the same thing. So it's IDX is good, but you can zoom it in, zoom it out, and then we are going to wait for this to touch too. But as you can see with IDX is more accurate. Okay, you touch it like that, you see it shift, it didn't shift, so that one is good. And then you make it like this. You can see this area have been rejecting the price, want to break this, but no, until it broke out. So this area 75.88, this is the area where we are going to catch our spikes. As long as these moving averages, that moving average pink and black, they are facing above, where the pink is below, I mean above black, just be the market is on a uptrend, and they be ready to catch many spikes, many spikes. As you can see, the market actually broke this low, huh? Now the market also, it's coming to this one. Okay, you coming to this one. So about this one is to catch spikes, so you don't really need to you just have to be careful that, okay, if the market reach here, okay, it broke it, there's a possibility that the market is coming to retest. But clearly this market is going to be a long down uptrend, due to the fact that this red moving average here also crossed, and it's now below the price. So that's, things are good. And the market also broke the purple moving average, which I'll tell you in due time, but not now. Let me go to crash and just show how perfect this strategy is. As you can see, the market has been on a downtrend from here on this 5 minute. And then you realize that now it has been okay here. The RSI has been also above the price, which is important. important. It's not you might think that it's a waste of time to draw or to put these things on a chart, but they will really help you out to make a perfect trade, to enter a perfect one that are not going to put you in a huge loss for it. And so now let me tell you about why I'm saying before you enter enter immediately when the price touch 98, you should also throw trend line and see where the market, if it even sometime it reach 98 on crash, but it doesn't mean to spike immediately. So the importance of trend line, it's just to give you an indication of where the market is likely to go spike. For example, I don't even need to look further. I just need to connect this low because this is the market, and I know for sure that I was going to enter here. So here I was going to enter, look, you can't see, but I was going to enter here. So this is the area where I was going to enter, and I was going to catch that first spike. And people with a huge account, I said, you can either, with those with big account, you don't need to really you see, with the people with a huge account, okay, let me go to 5. People with a huge account, you don't have to wait for it to touch 98. You just have to wait for it to cross each other again. So the market ended them. So if it was me to trade, I was going to connect this. Let me just make it a little bit smaller, like this. See, perfect. So the market touch. Let me tell you one more thing that I have to tell you. Know, if the market is making this not down on crash, look above. If the market is making this low and a high, you immediately connect the two high. But if the market is making it's coming down, if it's good to catch spike when it's making low and a high, but it's where now the market got rejected, not where the market ended when spiking. Not like the, okay, it's spiked, but it was on an uptrend, so not like this, not it's like that, like that. So, and you can also use IDX. As I said, IDX has been making also an up. IDX has been doing this. So yeah, you see, you draw trend line on RSI like this, and then you draw also your trend line on IDX. It's also depending on if the IDX is making a low high and the low high and low high, then you connect the top together, wherever the trend line is facing. It's you are going to enter only when the price touch that trend line. For example, if you connect this one and this one, we're going to wait for the market to touch it here, and for to touch there for you to enter. Very simple. No, but with this strategy, there is a lot of things. First, you have to wait. First, remember that it has to this black moving average here on crash has to be above the pink, and then on 1 minute time frame, you have to make sure that all the moving average, the black, the pink, the red, the purple, they're above the price. It doesn't matter if you see them doing this, whatever, as long as this one on 5, this one, they're above this, you are ready to catch spikes on 1 minute, because 5 minutes is what really matter, not 1 minute at all. So the good things about this channel, I want to not to give you strategy, but to teach you how to draw trend lines, how to catch spikes. I'm more of a spike catcher than a trading long, but I can trade long. As this strategy that I'm using, it doesn't matter if you want to get spike or trade long, you go. For example, if you want to trade long, I'll just wait. Okay, my battery is flat. I just have to wait for this to happen. I want enter, and I'll enter here. As long as this pink is below, it's above the price, I'll enter. You see, you enter here, but it's more of a trading long. When you see the red and the purple and all the moving are just below the price. But for now, as I said, this channel is not for teaching you how to trade long. It's that to teach you how to catch spikes. You know what, you guys, do let me in the let me know in the comment. You see the market keep on going. If you come on 1 minute time frame, what did I say? Hey, 1 minute time frame, 1 minute time frame is going. It's really really going. But as you can see, as I said, people with big accounts, you can see that this market been rejecting 32 and 1 2 3. 32 is the target, and you need to pick up all those things. Remember, you should know where the market got it. This market got be rejected 1 2 3, so you put a trend line here. It's okay if you miss out on this one, it's okay. But now, or you can, if I was whoever trading, I was going to put it, because this market is giving me something like this. See, like that, because it make a low. I'm in a low, so this market, whenever it's going to touch here, it's definitely going to spike again. But to be on the more side, guessing is doesn't work in as you can see, guessing doesn't work in forex. You need to know what to do with IDX. You look here, got rejected, one rejected and breakout, and definitely to spike when it's coming to do a retest. Guessing in forex is doesn't work. You need to be sure of what you are doing. It's very important. Be sure of what you are doing. You guys, my battery is flat. I'm going to end this video here. Do let me know in the comment what do you want me to make a video about. As I'm going to teach you, let me know if you want me to do a live trading back testing this strategy, and then I'll do that for you. Let me, if you want me to just drop videos on the strategy that I've been making already, let me know. What I mean is, if you want me to do a live back testing this strategy again, do let me know that on comment, and I'll definitely do that. But and if you want me to just be uploading video like this one already, that already recorded, also do let me know that in the comment. Do please subscribe, likes my channel, and see you again next time, people. Okay, uptrend, downtrend, a downtrend. Okay. Oh, definitely this one is going to be a very good downtrend. Look at that. It has been showing probably like here, people were bad me. I have to wait for the confirmation of the moving averages. So one more lesson, uptrend, wait, crash, uptrend, uptrend, downtrend, and the downtrend. So people, thank you so much for watching, and yeah, see you again next time.